Hey guys, Akil Stokes here. Welcome back to another weekly video. If you guys are brand new to the YouTube channel, I'm a Forex trader, a trading coach over at tier1trading.com. And this is a weekly video that I provide for the members on the platform as well as shared here on YouTube, giving you some insights to the top trading ideas on my radar for the week ahead. I also try to give you some educational tips that will help you become a better trader, usually lessons that we touch on throughout the week. I'm also going to give you an update on my trading performance for the year. Part of this video is not just giving you trading ideas, not just giving you tips, but showing you the journey that is a consistently profitable trader. And that means the ups and that means the downs. If you guys have been following along since January, I started off the year with a bang. I was on fire, hit kind of a dead period, broke out of that dead period, and now I'm kind of in a slump again, ending the week in a little bit of a drawdown. And so we're going to talk about that. We're going to dig into a little bit of the numbers. I'll share some of my thoughts. And for you guys that are on the Tier 1 trading platform, this is a perfect opportunity for you to kind of compare and contrast and see how your trading is doing in comparison to mine. So let's hop into the charts. Before we do that, a few things I want you to do. First, if you're new to the channel or if you're watching this every week and you haven't subscribed, hit that subscribe button. Also, make sure that notification bell is hit. I just started a new series called the Midweek Markup that's going to come out each and every Tuesday or Wednesday. I'm not shooting an email out like I usually do for this video telling you it's up. So if you want to see that short, sweet video of some of the trading ideas that are on my radar midweek, or a follow-up of something we talked about in this video, make sure you're subscribed. Make sure that notification bell is hit. That way you don't miss it. Also, Jason Grayson and myself, the Trader Coffee Break. Check it out each and every week. Short, sweet, transparent lessons in order of what you need to do and what you need to know if you are a beginner trader just starting out. So make sure you subscribe to that channel as well. All right, let's hit the charts. Actually, before we hit the charts, let's hit the stats and talk about my woes for the week. Now, first and foremost, I think there's a massive misconception out there about what it takes to be a good trader. Now, I've done some videos in the past on it. I'll link them here and hopefully have something shoot across the screen so you can click and watch it. But historically, I'm about a 55% trader. Usually my lows, my bad years, I hit about 45% win rate. My good years, I'm up in the 60s. As far as return on investment goes, my goal is to average 3% a month. I did have a hot year once where I got a 60% return. That is abnormal, right? I don't expect that to be the norm. Usually I'm anywhere between like 35 and 45. So, it's not the 50% a week like you may hear on the internet. That type of stuff just doesn't really exist. It's not really sustainable in the long run. So you got to kind of have the right expectations about what trading is before you get into it. And this year specifically started off with a bang. You can see the equity curve in front of you. We shot straight up in the beginning of the year. I was on fire. I warned you guys it's going to go downhill from there. And you can see we got caught in a sideways consolidation for a good period of time. That was a very frustrating period of time, going up and down, thinking you're going to break to new equity highs, and then you go right back down to the bottom of that channel. But if you know yourself, if you know your trading, if you know kind of where you should be, it just allows you to psychologically handle it and psychologically manage it because you know it's not out of the norm. We went on to break out of that. And you can see recently, I've hit sort of a drawdown. And a lot of that comes this week. There was a slow trickle weeks leading up to it. But yesterday, let's just put it like this. If I would have recorded this video on Wednesday, this equity curve would have looked a lot different. I got hammered in the market yesterday. There were a few wins sprinkled in there, but you can see I gave a lot back. But you don't need to panic over situations like that, right? If you isolate that one day, it looks pretty bad. I think it went from like 20% down to 18%, something like that, or maybe even more than that, 20 something, maybe a 3% drawdown. But bigger picture, when you look at the equity curve in the entirety, you can see we're still headed in the right direction. We're still in that bullish trend. And honestly, where I project myself to be, again, I try to average 3% a month. It doesn't mean it's going to happen month over month, but if I do that, I know I'm on the right track. I'm still right where I need to be, right? 5 months in, we got through May. I'm about 18% up right now. I should be 15%, or I should be 18% by the end of June. So there's no reason to panic over these short-term kind of obstacles that get in your way. Now, digging a little bit deeper into numbers, I don't really care about this stuff too much until the end of the year, but I know you guys like seeing it, so we'll share it with you. Here's a look at a chart of just kind of the pairs that I trade, the pairs that are in my portfolio, and kind of how they're performing. You can see that the win rate is there. You can see the return on investment is there. Obviously, some pairs are doing better than others, and that's part of forming a portfolio, right? I believe in diversification, right? Diversification in your investments in a macro scheme, and diversification in your trading portfolio, more of a micro scheme. Right? If you've ever done any back testing, which is the historical testing that we do to see if and how our strategies and techniques perform, you're going to notice that you have some up years, you have some down years, right? And if you're trading a single pair, you're going to have to absorb both of those, right? I personally would not want a losing year. So if I had a pair and I was only planning on trading that single pair and it had a bad year, I wouldn't do it, right? I live off my trading, so I can't afford to do that. But if you have multiple pairs, what you do is you diversify it. So you can see so far, Euro dollar is having a down year, dollar yen's basically break even, Aussie Canada is having a down year, right? I can absorb those down years by the pairs that are having good years. Your pound dollar, which is doing fantastic, your New Zealand dollar, your pound yen, your euro yen, which are doing well. Those are going to make up for those bad years. And the next year could be the opposite, right? 2 years ago, pound dollar, I couldn't find a win to save my life. But we had other pairs that made up for it. So that's part of diversification, building that solid portfolio that's going to keep your equity curve on a steady rise. Now, broken down just a little bit more by how I trade. I'm a price action trader. I also trade advanced pattern formations. So when I speak to you guys, I like breaking it down per advanced pattern formation because I know a lot of you guys trade that. And I grouped everything price action wise into the same category, right? So pullback trading, head and shoulders, double bottom, CTS structure, all that fun stuff is going to be under price action trading. And these are the numbers I'm going to have to dig into a little bit more, right? You can see there are some red flags in there so far. We're not halfway through the year, right? At the end of June, which is the end of the second quarter, that's when I do my bigger picture review and really start to plan for the second half of the year. But there are some concerns there, right? Not so much with the winning percentages, right? Gartley's are at about 60%. That's where I expect them to be. Bats are about 53. I expect them to be about 55. So they're kind of right there. Ciphers are at 92. I don't know how the hell that happened, but I expect that to kind of revert to the mean a little bit, drop maybe 20 more percent behind before the year is over. And price action trading is a little bit higher than I usually am, but I've also changed up some things about how I've approached the market, really looking for those grade A opportunities. So you can see the frequency of trades are lower, specifically talking about price action, only 12 trades taken this year, but I'm making sure those are damn good trades that I take. And that was something that I switched up going into this year from the past. And hopefully I'll continue to do that as I grow and progress as a trader. But the fact that Gartley's and Bats are performing where they should be, win rate wise, but return wise, they are in the negative, that is not a good sign. And I'm going to have to dig into why that is. I have a theory for why that is. I'm almost 90% sure I know why that is. It has something to do with target selection and me eliminating those target twos, which really make up for those losses. But I'll dig into that and get a for sure answer at the end of the month. But that is something that is concerning. So, for you guys that are on the platform, we talk a lot about digging into the stats, knowing your numbers, treating trading like a business. This is the type of stuff you need to be doing. This is kind of a remedial version of it. You want to take it to the next level. You want to look at, trade type per pair and really know exactly how each of your employees are performing. That way, if you have to give an employee a pep talk or if an employee is doing well and you need to invest more in that employee. But when you know your numbers, not only do you get confident in your trading ability, but you can start to see kind of where those red flags are and where you need to maybe make some adjustments. So again, decent. I'm where I should be for the year. I'm a little bit above technically where I should be return on investment wise. So not happy, not sad. I'm just in the middle, as I typically usually am. But hopefully this gives you a little bit of more insight of how the year has gone for me, especially for you guys that have been with me all year, seeing the ups and downs and ups and downs and ups and downs on a week by week basis. It's cool to see that big picture. Now, some of you guys may be asking about the equity curve drop at the end of this week, and was that related to the non-farms, right? Today is non-farms Friday, and we saw some movement in the market, not only Friday, but yesterday. And this follows up on an awesome conversation we had on the platform in the live trading room on Thursday, right? We're talking about hybrid trading. I actually just put out a podcast on this as well. So if you subscribe to the Trading Coach podcast, check it out. It's the most recent release is called Hybrid Trading. It talks a little bit about how I combine news and technicals, look for those home run trades. We had a similar conversation in the live room on Thursday. If you're on the platform, you can watch the recording. But we talked about, projecting the non-farms payroll and how the ADP report came out on Tuesday or Thursday. Usually it's a Wednesday. And that's typically a precursor. Those who are looking to trade the news or anticipate what the news release is going to be, speaking of the non-farms, are typically looking at that ADP number to tell them if non-farm should follow suit. Well, the ADP had a big hit. We had an ISM number that was a positive number as well. So the market anticipated, at least my belief is that the market anticipated a really good jobs number, right? That was the expectation. And on Thursday, we started seeing a lot of dollar strength in anticipation of that Friday news. Well, on Friday, if you saw the non-farm payroll, we missed. And why does the market move off of news, right? It's not the number, it's the deviation from the expectation. So when the market thinks one way and then price or the actual result is the other way, that's where the panic ensues, and that's where we see a lot of crazy movement in the market. And unfortunately, I was caught up on that, not necessarily Friday, but Thursday I got caught up in that, a lot of missed patterns. And today we're seeing some corrections, which makes me look at all these pattern opportunities that failed and say, man, now they're doing exactly what I thought they would do. Speaking of which, I'm sorry to ramble too much, but for you guys that are on the platform, I just had this great conversation with Mona talking about how to trade broken patterns, right? She talked to me. She's like, how do I re-enter on patterns? I'm like, re-enter? Like, why would you want to do that? And we got into some deep conversation. She explained her strategy. And, 30 minutes later, I'm like, you know what? There's actually some legs behind that idea, Mona. What you're doing actually makes sense. I would phrase it a little bit differently, but what you're working on actually makes sense. So if any of you guys are pattern traders out there and you're frustrated with maybe getting stopped out and seeing the market reverse and go in your, I guess, intended direction, but only after you've been eliminated from the trade, I recommend reaching out to Mona. She's got a pretty good idea of what she wants to do. Obviously, she has to back test it and prove it and, add filters, evaluate, do all that fun stuff. But if you're interested in something like that, either a way to make up for that loss, definitely reach out to Mona and you guys can work together on that, right? Working together is something you guys should be doing more of on the platform. There are some valuable services out there. I spoke to Steven this morning as well, who was testing the Daily Chore. And this is the first time you heard about the Daily Chore group, right? He was throwing some ideas. What do you think about that? What do you think about this? I said, have you talked to our community members about what they've done? Because there's an entire group dedicated to this particular strategy where everyone's testing it, everyone's sharing ideas, everyone's giving pointers, everyone's giving feedback. And if you're serious about trading that strategy, that's where you need to be. One, it's going to give you some ideas of things you should be looking at, things you should be testing, things you should avoid. Two, it's going to make your testing life so much easier because if someone already tried something that you were thinking about and the result came back negative, you no longer have to waste time doing that. So please take advantage of those groups. There's different groups out there. If you're going to be on the platform, if you're serious about becoming a consistently profitable trader, take advantage of every aspect of what we're giving you. Trust me, that community aspect cannot be underrated. Whew. All right. You guys ready to hit some charts? I'm ready to hit some charts. Let's go. All right, so let's hit the chart. We're going to start here on the pound yen. I am using the Trading View platform this week. Last week I was on Ninja, I believe, or during the midweek markup I was on Ninja. Now I'm on Trading View. I bounce back and forth. These are my two preferred platforms. These are the ones that Jason and myself recommended in this week's episode of The Coffee Break, along with a few others. So if you're new and trying to figure out the pros and cons of different platforms, that's a good little watch for you. I'll throw that in the description box below. But we're starting off here on the pound yen. And it's important to understand where we're at, right? One of the things I like doing is I like drawing out a horizontal line. I like looking left, because it tells me exactly where we are at, right? I can see that we are trading at structure. And because we are trading at this previous level of structure resistance, I have no interest in getting long. So I'm looking for some type of relief, some type of pullback in the market. And some of you guys can see it here, but if we go down to a 4-hour time frame, you're gonna see a potential advanced pattern setting up. And this potential advanced pattern may actually lead to something else as well. We'll get to that in a minute. But if we look at our advanced pattern here, we start with our lows here, swing low to swing high, that's gonna be our X to A. I'll find the triangle tool and draw it in for you. This is going to be our X to A, our first initial move. This complex pullback, right? Boom, that's going to be our A to B. This second pullback is going to be our B to C. And then if we travel down to our 886, that's going to be our C to D leg. That is going to give us a bullish bat completion. Now, I know I talked about you don't want to be bullish, right? Because we're at previous level of resistance. Well, you don't want to be bullish at the highs. If we come down here, all of a sudden, we're not trading at that previous level of resistance up top. We're trading at the most recent level of structure support at the bottom. This is certainly a place where I would look for some relief at. And remember, with advanced pattern formations, we're not looking for full-blown reversals or anything like that. We're looking for a little bit of relief, like a quick counter trend move, get in, get out, get our profit, hopefully, and get going to the next opportunity. Now, if price action does come down to this level, something else that can form is a head and shoulders pattern, right? You can see the consolidation that existed over here on the left-hand side, right? This is going to be our left shoulder. This move to the top is going to be our head. If we come down here and we retrace, let's say the advanced pattern works out in our favor, this would be a winning trade right here. This would give us a right shoulder and a potential head and shoulders pattern. Now, in order to have a valid head and shoulders pattern, we would need to violate the neckline, which is the previous level of structure support down here. But that is something else that you can look for if you're looking for a continuation lower, is that head and shoulder. And of course, you can look for both. You can be a pattern trader and a head and shoulders trader. But again, if we go back to the daily and we look at the bigger picture of where price is at, right? Head and shoulders are patterns, classic patterns that typically form at the end of a directional move, right? Directional moves typically end at previous levels of support or resistance. Price action has rallied up to a previous level of resistance. I erased my blue line, but you know it's over here. Would not be surprising at all to see a head and shoulders top form at that level before we get some type of retracement back down. So potential bullish bat, potential head and shoulders top. Keep an eye on pound dollar, maybe this is, or pound yen, pound yen. Maybe this is something we come back on Tuesday and visit in the midweek markup. Did I mention subscribe to the channel? That way you don't miss it, because I won't be emailing you guys about it. All right. Next, let's go to Aussie New Zealand. Aussie New Zealand. And this may actually, this opportunity may be done by the time you guys get this. I'm recording this early Friday afternoon and the markets are booming, baby. But earlier in the week, we took a look at an ascending triangle, one of my favorite patterns to trade. It's a breakout trade to the upside. You can see we broke out, we retraced, and we've been going up ever since. What I'm looking for is the next pullback opportunity to get long, right? We didn't kind of walk through the IPDE process here in the video, but my expectation as we look at a higher time frame, let's just pop to the daily, is that we're going to retest our previous level of structure highs. Oh, wrong tool. That we're going to retest this previous level of structure up here, 107.70s. And again, we're getting there right now. Who knows how this thing is going to act on Friday or the rest of today. But if we don't reach that level, right, look for the pullback trade, right? So look for, we'll go down to an hourly, look for price action to give us some relief, right? You can see the momentum is already slowing, right? Some relief. Back down into previous structure, and then look for an opportunity to buy it on a classic pullback type trade and shoot for the extension higher. Again, I don't know where this is going to stop, but if we were to stop and reverse right here, it looks like a 127 would line up right at the bottom of this zone. And when I say 127, I mean a 127 Fibonacci extension tool, swing low to swing high and back down. Boom, right at that level. So not a bad landing spot to look for targets at. Bigger picture, just in case this thing gets blown out the water by the time you guys see this video, still good practice with analysis, right? This could be another head and shoulders as well, right? Similar situation as the pound yen. Price action, nope, too big. Price action came down. We formed a shoulder. We're forming a head. If we do get up to this level, I'd expect some type of symmetrical behavior. This could be a good place to look for advanced pattern formations. We know they like to form within periods of consolidation, right? We can look for some type of symmetrical behavior, meaning the right shoulder to act somewhat like the left shoulder. And then obviously if we break, maybe not obviously, if we do break the neckline, you have a validated head and shoulders bottom, and the expectation would be that we continue up to the next level. So 2 trades on my radar. Hope you guys enjoyed. Remember to like and subscribe. I will see you Tuesday with the midweek markup. And if you're interested in joining the platform, take up our offer. 14-day trial membership costs you $1. Get in the live rooms, get in an accountability session, take some courses, network with our community of traders. Even if you don't plan on staying for the long run, take advantage of 2 weeks in a professional environment and better yourself. You owe it to yourself if you're serious about trading. So I'll see you guys on the platform. Until then, plan your trade your plan. You guys have a great weekend. Take care.